Let me tell you something that's going to blow your mind. There are 29 million lost and forgotten 401k accounts just sitting out there right now. And that's not a typo. 29 million accounts with a total value of $1.7 trillion are just collecting dust. And that represents about 25% of all employer sponsored retirement plans in America. And that means one out of every four retirement accounts is basically lost in the system because no one has rolled them over to their current retirement accounts. And I never ask you to do this, but I need you to share this video with your friends and family because you might end up helping someone who ends up finding tens of thousands of dollars in their old 401k that they completely forgot about. And I'm going to show you how to do this throughout this video. Then you can take full credit for this, and not me, but you. Now, how does this even happen? Well, think about the Great Resignation back in 2021 when a record 47 million Americans told their bosses that they were going to give them a notice. And people switch jobs, move states, start their own businesses. Life happened, right? Like I did. Now, I'm not judging anyone for making their moves. And sometimes you got to do what you got to do. But here's what I think happened during all that job hopping chaos. People were so focused on getting out of their old jobs and starting fresh that they completely forgot about their retirement accounts. They packed up their desk and said goodbye to their coworkers and walked out the door without giving their 401k a second thought. Now, let's say you left a job 10 or 15 years ago and you had, say, $10,000 in your 401k. You might have thought, well, it's 10 grand. I'll deal with it later. And then later never came. But that money did not just sit there as cash. It stayed invested. So if that $10,000 was in a decent S&P 500 index fund, just chugging along the market, it could easily be worth 30, 40, or maybe even $50,000 today because it's been working for you this whole time in the background while you forgot it even existed. And these forgotten 401k accounts have the best performance in the market by far because people have never changed their allocations, right? And I've seen cases where my clients found old accounts that had grown way beyond what they had ever imagined. And you can always become my private client by scheduling a session with me by visiting firestation.com/consultation. What if you used to work at NVIDIA? I can just imagine what your 401k account would look like if you had shares of NVIDIA stock from 10 or 15 years ago. You could probably retire by now. So there are two main treasure maps you need to know about. And the first one is a free database called the National Registry of Unclaimed Retirement Benefits. And it's a bit of a mouthful, but the website is super simple. Just visit www.unclaimedretirementbenefits.com. The industry created this to help connect former employees with their old accounts. And you just go to the site, type in your social security number, and just hit search. And that's it. It's a secure search right here, right? And if a former employer has listed you as a missing participant in their plan, your name will pop up. And I tried this out myself and it was really easy to use. The second one, and this one is the big government backed tool, is run by the Department of Labor itself, which you can find at lostandfound.dol.gov. And it was created as part of the Secure Act 2.0 from 2022, which directed the DOL to establish a national retirement savings lost and found database to help workers and retirees track down old employer sponsored retirement accounts. And the process here is similar to the first website. You'll need to provide some basic information about yourself and your employment history. The more details you can remember about your old employers, the better. And try to recall the exact company names if you can, the years you worked there, and any other relevant information. And sometimes companies change names or get acquired by other businesses, which can make the search more complicated. And the quickest way to do this is by logging in with login.gov. And I use this all the time because I'm an Air Force veteran and I'll log into my VA stuff with either id.me or login.gov. If you've never had an account before, you can always create one with this website. The initial process wasn't as painful as I thought it would be, but it did take me about 10 minutes because it's going to first have you fill out all the social security information, and then they're going to have you verify your identity with the driver's license by using your phone to take pictures. And then they're going to use some kind of facial software to ensure you match the state ID. And I was a little worried because I was a lot skinnier when I took that state ID photo, but it verified me anyway. And once you get through the initial process, it's going to become very easy. And here's something else that most people don't think about, and that's to just reach out to your old HR departments directly if they still exist. If you remember where you worked and the company is still in business, just give them a call and explain that you're trying to track down an old 401k account and ask them to connect you with their benefits department or their 401k provider. And sometimes this direct approach works better than any online database. And HR people are usually helpful with this kind of request. Now that you have found your old 401k from a long time ago, let me just show you what options you have going forward. And the first thing you need to find out is whether it has both Roth and traditional, or just traditional 401k, 403b, 457, or something else. And keep in mind that Roth 401k is the money you already pay taxes on, and traditional 401k, on the other hand, is keeping your pre-tax dollars that haven't been taxed by the IRS. So for this scenario, I'm going to say your old employer had both Roth and traditional 401k, and you have money in a little bit of both. So option number one is to initiate a rollover from your old 401k to your current employer's 401k. If your current employer has both traditional and Roth 401k, then you can do a simple balance transfer or rollover from your old 401k to your new 401k. This transfer is not a taxable event because you're simply transferring your money from one 401k account to another. But what if your new 401k does not come with a Roth 401k? Then you can still do a traditional 401k to traditional 401k rollover, but the money inside your Roth 401k will either have to stay with the Roth 401k, or you have the option to make a direct balance transfer or rollover to your Roth IRA. Keep in mind that once you move money from your Roth 401k to your Roth IRA, this is an irreversible process. You cannot ever move money back from your Roth IRA to your Roth 401k. So some people choose to move it to a Roth IRA, or some people choose to keep it in their old Roth 401k until they move to another job that comes with a Roth 401k. But what if your current employer doesn't come with a 401k at all? Then you can either keep your money where it is with the old 401k, or you can initiate a balance transfer from your traditional 401k to a traditional IRA. And do any of the rollovers count towards your IRA or 401k contribution limits for the year? No, they do not. Think of it like a bank transfer from one account to another. You're just moving your retirement assets from the old basket to the new basket. That's it. But keep in mind that the IRS has certain restrictions on how many times you can make the rollover every calendar year. So, for example, if you have multiple IRAs and you want to combine them into one traditional IRA and one Roth IRA, you can only make one rollover once in any 12-month period. So, if you have a Fidelity Roth IRA and you decided to move all of that money into a Schwab Roth IRA in June 2025, then you cannot make another Roth IRA rollover until June 2026. And another way to move your old account is by making a Roth conversion, but only if you want to pay taxes on the conversion in the following year. So there are different ways to go about it, but you can always schedule a session with me by visiting firesightshare.com/consultation if you ever get lost in the process. But anyway, one of them is to simply convert your old traditional 401k to your current Roth 401k plan. And just remember that you will have to pay taxes on the conversion you make in the following year. So if you make the Roth conversion in 2025, then you'll have to pay the income taxes on that conversion in 2026. You're going to get a Form 1099-R from the old 401k plan that shows a conversion that took place, which is going to be added to your taxable income when you file your taxes in the following year. You have to be very careful with this and not bite more than you can chew. If you have $100,000 and convert $100,000, your tax rates are going to go way up, right? And that's going to be added to your current W-2 income and any other income sources that you have. And if you don't have cash set aside for your conversion taxes, don't do it until you have that sorted out. You also don't want the old 401k plan to withhold taxes on your behalf, because the main purpose of the Roth conversion is to take advantage of the tax-free growth. The other option is to convert your old employer's traditional 401k directly over to your Roth IRA. And this is also a conversion and a taxable event. It's completely up to you which way you want to do this. Either way, you're going to owe income taxes on this because you're moving from a traditional 401k to a Roth account. That makes sense so far, right? And if you're in a state that comes with a state income tax, you have to account for that too. So it's crucial that you understand what your federal marginal tax rate is going to be with your current income and what your state income marginal tax rate is going to be by the end of 2025 before you make the conversion. And I will make a dedicated video on this topic in the future, so be sure to subscribe if you haven't done already. I know this information can feel overwhelming at times, and navigating your old 401k accounts and rollover rules can be confusing, but this is your money we're talking about. This is the money that will determine whether you can retire earlier because you found an account from 5 to 20 years ago that you have forgotten about. So take some time to do these database searches, bookmark those websites I mentioned, and gather up your old employer information and start the process. It might take a few hours of your time, but if you find even one forgotten account, it could be worth thousands or even tens of thousands of dollars. And remember, I'm here to help you navigate all of this stuff, and share this video with your friends and family, because what if watching this 12-minute video ends up helping you retire 1 year earlier? That would be awesome, right? And this has been another beast of a video, and I hope you got a lot out of it.